I don't think people, even I, realized how much of your job as the CEO is to be a salesperson. Like, it doesn't work if you are two co-founders and you think, I'm just going to hire a head of sales and they'll do it all. Like, it doesn't work. If you are the CEO co-founder, you are the head of sales, until further notice.
Musiio got acquired by SoundCloud. Hazel Savage is one of the co-founders of Musiio. She's also an investor, she is a thought leader, and she's great to follow on LinkedIn. That's where I got to know her. She's shared the experience with building and selling Musiio, and it's a really exciting story. Hello guys, and welcome back to Sound Connections podcast. Today I am lucky. I have been following this woman on LinkedIn for some time. Hazel Savage, welcome.
Hi, thanks for having me. Lovely to be here, Jakob.
You are the second guest we're having on the Exit series, which is about exits in the music industry. And I think this is particularly interesting because I'm a big researcher. I like to read stuff. But I really have a hard time finding great in-depth content about the processes. And for entrepreneurs, I think it's important to understand. So thank you so much for being here and sharing this journey with us.
No problem at all. My pleasure. Happy to be here.
So you were the co-founder of Musiio that got acquired per SoundCloud, and this sort of sets the frame. But can you just make a brief introduction of who you are and what you do right now?
Yeah, absolutely. I always say my name is Hazel Savage. I'm the Vice President of Music Intelligence at SoundCloud. And I joined SoundCloud in 2022 when they acquired Musiio, which was the company I was the CEO and co-founder for.
Sure. Okay, I'm looking so much forward to hearing about this story. You're one of the guests I've really been looking forward to. But before we do that, I just want to set the scene for your life, because we're going to talk about Musiio, we're going to talk about the acquisition, but you're obviously very central to the story. So could you tell me in a couple of minutes how you got into music and how you sort of got into the journey of co-founding Musiio?
Yeah, absolutely. There's a lot of sort of in points. And I know you said not to go back too early, but I think getting my first guitar when I was 13 is one of the sort of defining moments at which I decided this was the thing that I was most interested in life, aka music, and at that time being a performer. But there've been many other inroads as well. So various jobs I've had that have kind of built up the base of knowledge that I've needed to get where I am. So the 4.5 years I spent at Shazam in the early 2000s was sort of instrumental in crafting my knowledge around audio fingerprinting, but also direct consumer apps, and also very, very early versions of music technology. And there've been other inroads as well, even right up until, and for anyone who doesn't know, I started Musiio by joining an incubator. And I joined one called Entrepreneur First, which is UK based, but they have a Singapore office, or they did when I joined it in 2018. And again, that was kind of another off-ramp at which they called me and said, would I be interested in doing this incubator program? And I just left BandLab and I didn't really know anything about incubator programs. And I was like, I don't know, this sounds really weird. They're going to pay me to build a company? I don't know, that's weird. What's that? But then the way they kind of hooked me in was they were like, we already have James Brown's drummer doing the program. And I was like, I've seen James Brown live. I'm a big fan of funk music. So I was like, I'm just going to go along for the initial meeting so I can just meet this guy and be friends with this guy. And that was a great way to hook me in, because obviously, and I did meet Eric, and Eric's fantastic, Eric Hargrove, big fan. So there's all these points, all these decisions and off-roads at which that built me up to where I got to with Musiio, I guess is what I'm saying.
Yeah, that's great. Okay, this is gonna be a fun podcast. I can already hear.
That's the music industry.
Yeah, a lot of random encounters really creates the sum of the whole. Okay, well, let's dive into it. So, tell me about this incubation program. They contacted you and you said they want to pay you to start a company. Can you go a bit more into detail?
Yeah, absolutely. And so that's the quick version. But the long version is when they first started in Singapore, because it was a UK-based incubator originally, and then they opened the Singapore a few years later. And their whole model is actually, they don't even call themselves an incubator, they call themselves a talent investor. Because what they do is per cohort, they get sort of 50 to 100 people. You join as individuals, and then you meet somebody on the program to work with who has a complementary skill set. So that's where I met my co-founder, Aaron. However, I'd never heard of an incubator or a talent investor. And they were basically hitting people up on LinkedIn and doing a load of email outreach. And I just got this message, and it was like, would you want to join EF's next cohort? And they pay you a stipend to do the program, because their working theory is that the best founders, A, don't work for free, and they aren't going to leave their jobs at Facebook, Google, and all these other fantastic companies for nothing. So if you can de-risk the building of a company by paying the founders, that's their theory, or that was certainly the theory in 2018 that they were working on. But because I'd never heard of it, it just sounded like a massive scam. But they also knew that, because they were like, everyone thinks it's a scam, because someone's, calling you up saying we're going to pay you for 3 months to build a company. You think, why would you do that? That sounds weird. But then when you hear about the detail, but lucky for me, I was like, Singapore's a super safe city. I'm pretty sure if I go along to this in-person meeting, nothing bad will happen to me. Secondly, they're offering a free coffee, and it's like only around the corner from my house. Yet another de-risk. And then they told me they had Eric Hargrove, James Brown's drummer, already signed up to do the program. And so I was like, there's enough here that I'm going to say yes to an initial meeting. And then that was literally the start of it. And next thing you know, boom, got a company. There it is.
Wow. Did they pair you with your co-founder? Or did you go through...
No, they don't pair you. What they do is they just say, so there was about 100 people in my cohort, and all they say is, in the first week, try and go for coffee with 5 people. That's the only requirement. And then everyone's doing the same. So everyone's inviting each other out, and the idea is to just chat to lots of people and get a feel for who you could work with. And then there is a sort of a simple methodology behind who should work with who. For example, I was at the time what they referred to as like a domain expert. So I had 10 plus years experience in the music industry. Theoretically, I should be able to build a better company in the music space. That's their working theory. That would be true if I was, say, if I'd had 10 years experience as a doctor. Theoretically, I should be able to build a better medtech company than a random stranger on the street. And so I was what they called a domain expert, and my co-founder was like a technical expert, because he had 10 plus years coding, building products, etc. And so what they say is like 2 technical people can work together, because you see that quite often. You'll get 2 very technical people, they'll handle a different part of the technology, they will have slightly different personalities, maybe one naturally is more CEO, the other's more CTO. But with a domain expert, you have to work with a technical person. What they don't want is like 2 domain people working together, because then what you end up with is 2 people who know an industry really well who can't build anything. So they have these combinations of these types of people can work together, these types of people will be ineffective working together, and it's all data driven. It's all based on the statistics from previous cohorts of what's yielded success. But not strict. They don't literally go, oh, you and you work together. And so just went for coffee with 5 people. And for me, I was really lucky. It was like a pretty obvious choice who to work with. You just get that connection with someone, shorthand. My co-founder, Aaron, had worked in gaming previously, which isn't the same as music, but the entertainment field, there was like enough shorthand that we were very on the same page from day one. So that's kind of how the first week of Entrepreneur First went.
Amazing. I have not heard of this before. And if someone contacted me about it, I would think it is a scam.
If someone contacted me about it now, despite having done it, I'd still think it was a scam.
It probably is a scam if you get such a message still. But sometimes it results in Musiio. Okay. Well,
exactly,
that's interesting.
Exactly. Yeah.
Okay, so you have this first week, you meet Aaron. It's kind of obvious that you guys could be a match. What happens then? Do you start brainstorming ideas? What was the structure?
Well, so basically at EF, you just sort of mutually agree you're working together. And then there's this Slack channel, right? Which is like, there's an API connecting to like the main EF dashboard. So you like officially announce as co-founders and a little post pops up in the Slack channel. And what they also encourage is if you find even within 24 hours that it's not working, you're not on the same page, you don't want to work on the same stuff, then you break up as co-founders and that announcement goes in the Slack channel so that other people can see who's available, other people can work with other people. And there's like all the celebratory emojis, like when people break up, like they try and turn that into a positive experience, which is based on that idea of like a founder just constantly iterating, even if that's iterating on co-founders, because it can be you start working on something and you realize you don't have an idea or you don't have anything. So, but Aaron and I were one of the, I think they say about 50% of every cohort starts working with someone and then only works with that person. But that, of course, means 50% of people have like 3+ co-founders over the course of the program. So, but we were one of the started working together and then we never changed. And so really what we started doing was we sat down, I think in the first week, I still have the notebook, and I just wrote down the 10 worst things about the music industry. And then I read them out and I said, which of these has a technical solution? And I always joke, and I hope swearing's allowed on this podcast.
Yeah, absolutely.
Because number 6 on the list was just people are dickheads in the music industry. And apparently there's no AI solution for that just yet. So, but the one on the list that we did choose to work on was the fact that there are, I think at the time the number was like, in 2018, I think maybe the latest press release Spotify had done and said it was either 40 or 60,000 tracks a day being released, which regardless of which number it is, that's insanely high. It's now 100,000, and probably more. But the challenge was there's now more music released every day than used to come out in a whole year in the Western Hemisphere of popular music. Nobody could listen to that amount of music. So what do we do? How do you ever know what's good? How do you ever know what you have? How does any streaming service ever playlist anything? And so the idea was just, could you build an AI that could be like a first pass filter? Could you build an AI that could listen to music? And my co-founder thought that he probably could. And so that's what we started working on. Of course, much later on, it became productized and it became, it became Musiio and it became a more sort of defined company. But really, it was just finding that problem solution, which is there used to be very little music released. Now there's a lot. Can we do anything with that?
So at the end of those 3 months, did you form a company and then start pursuing the product?
Yeah, so after the 3 months of sort of ideation and initial build, I think we incorporated at that point. So we were a Singapore-based company incorporated in Singapore. And again, as part of the EF program, and again, it's different for every country, they pay you a stipend for 10% ownership in your company. And that's the sort of the more traditional incubator style of things. So EF very much became like the first investor from that respect. Then you build for another 3 months. So it's like a 6-month program in total. And then you do a demo day at the end of the 6 months, which is they got us in a room. It was at the Google offices in Singapore, pitched to about 200 investors.
Okay.
Yeah, which again, like music tech is not really a big thing in Asia or in Singapore, certainly. So, a couple of my actual investors, they had like the little pamphlet and they were sort of, as soon as I got on stage and I said the word music, they said they all just turned the page, like not interested. So we had a bit of an uphill struggle. I think as well, there was you just give me a flashback there. I just remembered there was an Excel sheet of all the teams that had pitched, and there was a tally of how many meeting requests they'd got off the back of demo day. Like, how many of the 200 investors in the room wanted to meet with your company off the back of your pitch? And I think there was maybe around 20 companies that pitched. And I think we were like, I don't think we were last, but I think we were second last. We were like 19th most requested, aka not really requested at all.
Yeah.
Like, and I think we only had a couple of people want to meet with us. And I don't think some of them were that serious. I think they were just, the more deal flow, the more analysis we can do, the better. Whereas like right at the other end, you know, in the pole position was a good friend of mine who was building a medtech company using AI for cancer detection. And, you know, that's right up their street in Singapore. That's exactly what they want to look at and invest in. But some music tech company, no, not really interested.
Yeah, and we won't talk too much about it today, but I'll just briefly come into it because you also invest and you've been quite, you know, active about speaking about it. But this is something not just back then in Singapore, but globally still meets a lot of reluctance from investors. It's sort of the lack of domain expertise for, you know, normal investors that really makes the financing journey complicated.
100%. I think it's a multitude of things. I think it's very, very hard for a non-industry specific investor to do the due diligence. There are just things about our industry that if you know, you know, and if you don't, you don't. And that's not helpful for traditional investors. And I also think that another part of the challenge is a lot of them have been burned. So if they have done investments in music tech, they've either gone spectacularly wrong or the founder has claimed the TAM is bigger than it is, or the opportunity is bigger than it is. Because, and this is another thing, like I looked up the other day, which is like the total yearly value of recorded music is around 20 billion. Like that's how big our industry is, which is like, that's okay, 20 billion. That's not pocket change. But when you compare that to the size of other industries, like I can't even off the top of my head, but like, what's the size of the medical industry in the US alone? Like, it's in the trillions, you know. And even, I was even looking this up the other day, like the HR software Workday, just because I was just curious, just Googled it. It's worth $70 billion. And I was like, okay, so one HR platform is technically worth triple the entire music industry on a yearly basis. And that's just because every single company in the world needs a HR software, whereas not everyone in the world needs an AI that can listen to music, right? So we're getting into a slightly niche area. The reason I invest in it is because I can do my own due diligence. I've worked in this industry for like 18 years. It's really easy for me to assess whether an opportunity is good. I love this industry and I love working with founders. But I see why a lot of more traditional investors are skeptical or a little standoffish with the area.
Yeah, no, I agree, and we spend a lot of time fundraising on behalf of our portfolio companies, and we've been relatively successful, at least in the pre-seeds and the seed stage. What we've been focusing a lot about, which I believe a lot of music companies don't, is sort of parallel narratives to other industries. For example, you know, one example I use all the time is, you know, when you have a record label, for example, it's not about creating, you know, hit songs. It's about creating, you know, IP rights that are non-correlated assets to generate equity markets with, you know, yearly dividends with a multiple acquisition it's kind of have these kind of terminologies, you know, and use the same language as you would use of any stock. And, you know, what happened with Jukebox, it makes it even easier to make that comparison.
Yeah.
And that's what we focus a lot of our energy on, especially actually did a LinkedIn post about this 2 days ago, because I believe there's so few investors in the music industry, music tech industry. And what they usually do is they invest a bit later than the early stages. Like, so these early stage influx of money is just very difficult, very, very difficult, more difficult than other industries, I would say. At least, Let's not go too deep down that rabbit hole. That could be a whole different episodes and 50 episodes from now. Okay, so you have this 6-month program. You do the demo day. You're not very attractive, but But do you get do you get some more investment so you can keep on like financing this thing?
Yeah, we did. And so the other thing I learned is that the number of meeting requests do not correlate to successfully raising a round. You don't need 40, 50 investors to want to meet with you. You only need the right one investor. And so we were very lucky in that when we did the program Entrepreneur First, and I credit EF with like two things. Like they introduced me to my co-founder, who I never would have met otherwise. And they introduced me to our first investor that wasn't themselves. So they have these venture partners who are basically your mentors on the program, who you meet with every week. They ask you lots of questions, etc., etc. Ours was a Dutch guy called Ad, and he put in like the first 50K check. And so he put in like a 50K check from his own personal angel investing, but he's also incredibly well connected. So he was then able to go and help us set up strategic meetings. And as I say, that investor who had said they'd looked at the booklet and heard music and turned the page, he was able to go back to them and go, take another look. Seriously, take another look. And that's how I even heard that story, because then we had that meeting and that person did end up becoming an investor. So again, just having someone who reputationally is well known, who can then advocate on your behalf, who has those relationships. So taking that initial 50K from Ad was fantastic, because it really showed he believed in us, but he was also then able to make some really great strategic introductions, which was completely the most valuable, priceless, I would say.
One of the questions that comes to my mind, and I don't know the answer to this, is how many qualified founders with great co-founding teams don't have the opportunity for having these freak accidents to start with, that just ends up not having the opportunity to build something. I don't know, but I think a lot about it, because I believe if the music technology industry should get better, and the music industry in general, we need to have prompted situations where these freak accidents can happen. Does that make sense?
Yeah.
We need to, as an industry,
And I think there's another EF concept is that talent is equally spread globally, but opportunity is not. Yep. And so hence why they were opening up cohorts, and they still have one in Bangalore, Singapore, France, Germany. I'm not quite sure where else they're focused on at the minute. US as well, I think now. And, it's so true that great founders can come from anywhere, but we tend to see great founders focused in certain areas due to opportunity. And I think I love that some of the assets are becoming more democratized as well. So I find myself sending the link to Y Combinator's startup school, because a lot of people reach out to me like very early stage, like they might think they want an investor, but they haven't got an idea or a pitch deck yet, so they don't need an investor at this stage. But to be able to learn how to build a company and how to do it, something like Y Combinator Startup School, it's online, it's free. If someone's keen enough and wants to be an entrepreneur enough, they can find these online resources that didn't even exist back in 2018. So I'm kind of hopeful and positive that more opportunities are being created, and actually probably COVID accelerated that, because when everything had to go 100% online, a lot of people realized it mattered even less physically where you were. So it's interesting.
I agree to that. Okay, you get this money and you're able to support some sort of livelihood as founders, and you just start building. Can you tell me about that process?
AI is really expensive. So that's why you need to raise money to build it. So it was myself and my co-founder initially. I think our seed round, we did 1.2 million Sing dollars, and we then made a few strategic hires that we needed. At the maximum size of our company, we were like 15 people. But back in those early days, we were probably about 5 or 6. It very quickly became about, okay, well, we were doing the entire job of running the company between the two of us, but, to grow or to do anything else, we're going to need to hire people to take over chunks of what we're doing. So, for example, in the beginning, I was doing all of the the QA, all of the user listening to see if the AI had accurately categorized certain music. But that's incredibly time consuming, very office based, no time for going out and doing sales, no time for working on the brand, no time for meeting with investors. So then we hired, I think Isabel was our first hire, who was basically, I think she was a fresh grad, or she had 1 or 2 years experience, music degree, music production. And, she was just really switched on. I could teach her to do what I did in the music listening space. And then she could take over that portion of it. Great. Now I've got a whole batch of free time that I can fill with other stuff. And that was kind of our hiring methodology the whole time. Like, what can we chunk out and give to someone else? Because the two co-founders can do everything, but that doesn't scale. And, just little things like finding a little co-working space to go to, taking the team out for cheap dinners, doing everything to keep it sort of like fun, but doing everything on the cheap. But I enjoyed that.
Yeah. And did you pursue, so you talked about sales. So tell me about the first sale. How did that happen?
Yeah, I think, and one of my insights as well is, and I think this was some feedback on the incubator we did that a lot of the other co-founders had, which was, I don't think people, even I realized how much of your job as the CEO is to be a salesperson. Like, it doesn't work if you are 2 co-founders and you think, I'm just going to hire a head of sales and they'll do it all. Like, it doesn't work. If you are the CEO co-founder, you are the head of sales, and until further notice. And I still am. So even, I've been able to outsource it more and more as we go, but I still do sales. I still have clients that come directly to me. But getting that first sale was incredibly difficult. And I really credit our lead investor, because we had 3 deals that were super close. And I was convinced, when we closed the funding round in December 2019, I was like, one will sign in January, one will sign in March, one will sign in July, and we'll have lots of time. It'll be great onboarding. In fact, all 3 of them signed within 48 hours in July, which meant that January to July was incredibly tense, because there was, there was no sales. So that was no revenue, which was incredibly stressful. Don't recommend raising pre-revenue if you can avoid it. It's a lot of pressure. And then, basically just trying to get that first one over the line. But I really credit our lead investor, Wavemaker Partners, Paul Santos, who was our board member, who was like, just say anything to get them to say yes. What can you put in that initial deal that's just, they just have to say yes? It would be so stupid for them to pass on it. And what it ended up being was, the reason why one of our first clients was holding off on signing is because they were worried about the implementation, and they were worried about getting it on their product roadmap and having the resource. So I offered within that first deal that I would fly 2 developers to the UK, we were in Singapore, to come and build it on site for them, to do the work for them. Now, obviously, in the long term, we never did that again. We never was like, I'll give you 2 full hires for a week to come and build it for you, because there's no profit in that. But really, when you're still trying to reach that product market fit, and you're still trying to get anyone to say yes to this, to prove that it will work, doing something. But I almost felt like, because the idea came from the lead investor, to do anything to get them to say yes, it almost felt a bit like permission as well, because we were certainly a bit like, oh, can we do something that's such bad business technically? Is that, what should we do? So that's kind of what we did. And once we had that first yes, all the dominoes fell very quickly. So interesting times, stressful times.
I can imagine it. And one of the benefits from me running this podcast as an entrepreneur myself, and I can, some of the things we've done pre-revenue. Luckily, most of the stuff we do now is post-revenue, but it's incredibly stressful. And you're at the mercy of someone different and than yourself, and that pride-wise, practically wise, time machine wise, is just incredibly draining.
Yeah. I did find it incredibly stressful building a company, but it's also a bit of a buzz. Like, the bigger the challenge, the greater the success. And there was also somebody else, and this is what I was really grateful of as well. You know, a lot of people have said the entrepreneur or the founder's journey is quite lonely. Like, I never personally felt that way because I had a co-founder, but also because I had this community from the startup incubator. And there was a really great, there was a second Aaron in our cohort. So not my co-founder Aaron, but the other Aaron. We had two Aarons. And he said a great quote, which was like, if everything goes right, you don't learn anything. Yeah. And I was like, and so I kind of kept that with me, and I found that really motivating. And I think I've said it to other people since, which is, you know, if you wanted to raise money, then suddenly there was money. And if you wanted to get a deal, and suddenly there was a deal. Like, if everything went that easily, you would learn absolutely nothing, because it would all just fall in your lap. It's through the failures and the things that don't work and the struggles that you become the founder and the entrepreneur that you are. And so, and without those struggles, you really don't learn anything at all. So even though it kind of sucks and it kind of feels a bit rubbish at the time, you don't learn anything otherwise. Yeah. So to be grateful for that opportunity, which I really like that phrase.
By those metrics, that should be quite clever as well.
There you go. Good.
Okay. Well, okay, this is great. So you land the sales, you have revenue. Like, do you scale more? Like, can you make enough money on your own? Like, what's the process there?
Yeah, so we pretty much got to sort of break even / profitability. I think we're probably by 2021, to be honest. So the pandemic was interesting because I just basically used to work till like 3 a.m. in Singapore and then sleep till midday. Like, I shifted my whole day to like US and European working hours since I couldn't go and visit clients. And yeah, we ended up with enough clients that we basically were covering all of our costs on a monthly basis by about 2021. So to get from like idea, fundraise, first sales to kind of break even in about 3 years was fantastic, and I appreciate that is quite a short timeline for anyone. And I do think as well, you know, my opinion and experience is that music tech is very high acquisition. There's a lot of acquisitions in this space. And I told my co-founder this, I think on the first day of meeting at EF, I was like, by the way, if we decide to build a company together, chances are lots of people will try and buy us or ask if we're for sale, or that may be a reasonable outcome. Are you okay with that? And he said that he was, like, and we had that discussion like week 1. And it's true. I think maybe even in that first 3 years, I think we had 2 serious offers that we entertained, but ultimately were not the right fit for one reason or another. And then obviously we sold year 4 to SoundCloud. And, you know, what wasn't known at the time, because I would say 70% of all of our clients did not reveal that it was our tech they were using. They wanted a lot of companies wanted you to think maybe they built it in-house or something. So even all the great customers we have on our case studies page is less than 30% of those who would allow us to talk about it. SoundCloud were a client for about 1.5 years before they acquired Musiio. And it made a lot of sense because they were one of our biggest clients, because we had volume-based pricing and they have 345 million tracks. So they kind of, they've been working with us for 1.5 years, and they kind of came across with a, hey, would you be interested in an acquisition? The correct answer to that, no matter who asked you, is always, I'd be open to a discussion. And then you see where they go. And so that was it really. And I just, we really had 2 options. We either joined with a bigger company to keep growing the technology and growing the impact of the technology, or we would have gone out and raised a Series A and, tried to build those elements ourselves. But yeah, music tech tends to be high acquisition. So it was always a It was always a potential outcome.
Yeah. Let's go a bit more into detail. What actually happened? So they were your client for 1.5 years. It's a volume game, so they can see, okay, this is getting expensive for us, but it's high value. It's better that we buy it. Did they send you an email? How was the conversation started, and how did they approach it?
It always goes the same every time. Like, you'll have an account manager or someone that you would like liaise with, because with separate companies, SoundCloud and Musiio. So there's someone you work with on the integration side, but there's someone who's essentially your point person for anything you might need on the tech, the invoicing, you name it. And then suddenly one day, and this is true of SoundCloud, but also all of the other offers we had, suddenly one day you get asked, oh, hey, could you join a call with this person? And the answer is always, when they're a client, yeah, of course, join any call you want me to. And then when you go and look it up, you see that person works in corp dev.
Yeah, okay.
And it's as simple as that. And I'm like, oh, I've got a meeting with corp dev now. Sometimes you're misled, because sometimes they don't have a corp dev title, but they have something like strategy or something. And you think, oh, maybe they want to expand the deal. Maybe there's more opportunity. And then they get on a call and they go, are you for sale? That's happened. That happened a couple of times. I'm trying to think. I don't want this to sound arrogant, but it would happen with most of our big clients. And really, it then became a question of going, oh, well, thank you very much. It's absolutely delightful. Yeah, we'd absolutely be happy to consider it. And then the next thing you want to do without sounding too pushy is be like, give me a number. Because a lot of people have said they want to buy us, but if they're not actually going to send a term sheet over or give me any specifics, they're not that serious. They're not that far down the line in the discussion. Like, yeah, I can say we're open to it, but that's as far as the conversation goes. So as I say, on only 3 occasions, and one of them being SoundCloud, did we ever get given a number? And so I was able to then pass it into, they're not really serious if they're not giving me a number, you know?
What was the, you don't need to go into specifics, but what was sort of the shareholding structure? Like, you and your co-founders had some shares and you have investors diluting that, or like what was the situation there?
Yeah, so our cap table when we sold, I think there was about 13 of us on the cap table. Myself and Aaron, I think we owned something like, we had like 49 or 51%, like barely a majority, if a majority, between the two co-founders, and he and I were 50-50. Again, that's an ES requirement. When you join their program as individuals, all companies started through EFR, equal ownership, which is not true in every case, but I guess it massively simplifies things as well with their program. And then obviously when we took on, EF had the initial 10%. I think they got diluted down slightly after we raised our seed, and then we did a bridge round as well. And essentially, the rest of the cap table, Wavemaker Partners was our lead investor, but it was relatively clean, but we were a relatively young company. So I think there was about 13 on the cap table, lead investors, incubators, angels, founders, and then of course the 10% ESOP as well for the staff.
Yeah. Amazing. I would like to talk a bit about how that impacted you, and of course also go back to how the company operates now under the ownership of SoundCloud. But was this like a life-changing event for you, that acquisition?
The exit decision specifically? Yeah, definitely. It's given my husband a rather large guitar spending habit, which, one of them is mine, I think. It's on this wall, my one. But, it's definitely life-changing, especially coming from the northeast of England, a background where, I've always had to work to pay the bills. And even from the point of view as, my very, very first job was I used to work at HMV, a record store in London, on minimum wage. So this was 18 years ago, but I earned £14,000 a year, total. Yeah. So my take-home pay after tax was about £900 a month. My rent in London was £500, which meant I had £400 to live on for everything, for bills, for clothing, for food. And, just learn, could go for a night out on £5, would always get the bus because it was £1 and the tube was £1.80. Would buy a pack of pita breads for 21 pence and a tub of hummus for £1, and that's lunch for 3 days. Just that's where I came from, and could never work an internship at a big company because they were unpaid back in the day, and I couldn't afford to work unpaid and live in London. So to go from to work that hard, and then to be able to, I like to think I still work hard, but with a slightly higher level of comfort and slightly more guitars. That's the main outcome.
Absolutely. That's good to hear. And I think, obviously, I rarely hear of founders that are successful that did it for the money, because that's just, it's a poor motivation. It won't stand the test of time.
And as I say to many people in the music tech investing space, if you are or even working in the music industry, if you are motivated by money, there are a lot easier ways to make money, and there are a lot of other industries that pay much better. So if you are a developer, or you are a marketer, or you're even an HR person, those medtech companies and those fintech companies are paying significantly higher wages than music tech. So you're generally only in music tech because you want to be. And if you're in it for the money, you've picked poorly.
Yeah. I had a quite elaborate discussion with Mike Bolchensky about this very topic, about being the lifers in the music industry. Even though I'm only 30, I'm a lifer already. It's if I were ever going to change, it's because my wife would twist my arm and break it for financial reasons, which is a valid reason. But besides that, you could never get me to leave it.
Yeah.
Okay,
Whereas
so
I always say I'm a lifer as well, but for slightly different reasons, in that I'm now not qualified to do anything else. Because I turned 40 last year, and I have only ever worked in music and music tech. So I feel like if I applied for a job at a fintech company now, they'd be like, maybe you have some transferable skills, but you don't really know anything about any other industry. So I'm locked in now. That's it. Permanent.
Oh, that's good. Okay, so we're sort of at the ending note of the podcast, but I want to understand what changed in the company's life, in your life, practically speaking, after acquisition. Did everything just continue as usual, or was there a change?
The most exciting change is I no longer have to do payroll, which is brilliant. Obviously we were still a small enough company that there was still a lot of HR and admin stuff that I had to do. If someone's visa was going to expire in Singapore, I'd have to log into ePass online, I forget what it's called, and do the new registration. And now that's not my job anymore. I don't do those things at SoundCloud. So there was some changes. There was a nice lot of that, day-to-day BS, invoicing, that I was able to be like, oh great, there's a finance team, there's an HR team. That's really enjoyable. But especially in the very short term, it wasn't massively different, because we kept the technology available in the market. So we still have all of our clients, and we still sign new clients. So the job hasn't changed too much. But it's more like half my time is spent in doing the exact same job I did before. The other half is treating SoundCloud like an internal customer and thinking about how best the technology can be applied facing inwards. So that's probably the biggest change. That and no payroll.
That and no payroll. Okay, yeah. But how about your stress levels? Is it a more comfortable human position you're in?
I don't know. That's a really hard one to judge, because I haven't really had any time off. So I haven't really had a reset from that perspective. But then again, I've never taken a gap between jobs either, and I don't know that I'd be very good at it. So, 'cause I'm a bit of a workaholic. So I sort of I'm sure. I think there's definitely a much lower stress level in that. Even though we got to sort of break even, it still felt entirely my responsibility to make sure that revenue keeps coming in and that it keeps growing. Because if it doesn't, then people lose their jobs, and that is directly on me. Obviously, a bigger company like SoundCloud has its own board, has its own investors, has its own C-suite, which I'm not part of. So therefore, those things are not my responsibility anymore. And it's not whether people keep or don't keep their jobs is no longer a direct impact of financial decisions that I have made. And I used to find that very stressful, like knowing that people's livelihoods are your responsibility. I found very personally stressful. So to not have that is probably a lesser stress, but that one element. But at the same time, you still have a full-time job. You're still working Monday to Friday, and you still have a lot to deliver. And I still have a team that I'm responsible for, even if it's not from a payroll perspective. So I think all work's stressful to an extent, and I feel like I'm constantly looking for that work-life balance. Will I ever find it? Who knows?
Who knows? Well, that's a great question. I think we're both struck by the same sickness of entrepreneurship. Who knows? That's great. Well, thank you so much for going through the journey. I really appreciate you being honest and open about it. I think it's an important thing in the music industry to have the opportunity to hear about these things. Obviously, the main audience intended for the podcast is entrepreneurs or people curious about entrepreneurship in the music industry. And I try to leave each episode with some sort of advice from the guest about entrepreneurship. Is this some of the learnings you've had throughout the journey that you think is particularly interesting for other people to hear about?
Well, I think I already dropped the sort of the absolute gem from Aaron, which was, if everything goes right, you don't learn anything. I think I love being an entrepreneur, but also I do accept that it's not for everyone. You have to be really comfortable dealing with ambiguity. You have to be really comfortable, like, not knowing what's going to happen. You have to be really comfortable not being told what to do. And that, and you have to be really comfortable with when you hear no or rejection. And those things no longer bother me. If somebody says they don't like my idea, they don't like the thing we've built, I'm like, I really don't care what this person thinks most of the time. So yeah, you just have to have that resilience. And if you're tempted, I think it's worth a shot of becoming an entrepreneur. But as I say, if it's not for everyone, so that's no bad thing as well.
So I see you traveling to conferences, and you must be contacted by a lot of people who's really interested in getting some sort of association with you. Is that overwhelming for you after the exit?
Yeah, a little bit. And I do find that really difficult because I like to reply to everyone, and I like to read every deck I get sent, and I like to be able to help everyone if I can. But it's got to the point where it's that's probably not realistic or not possible. I sort of toyed with the idea of do I want to be one of those people that basically do that thing on LinkedIn where you can only add me if you have my email address. Because I just get so many people trying to add me. But I didn't do that because I thought, no, because I'm still technically in sales. You want to be as accessible as possible. And you'll end up shutting out some people that you do want to contact with. But basically, if someone connects me, I either have to absolutely know who they are, or they have to tell me where we met and how I met them. And then I will accept it. If it doesn't meet that criteria and it's just somebody wanting to add me, probably because they want to try and sell me something, then I'm not going to accept that invite. So I have a couple of hundred sat in my invite list that I don't know who they are, so I'm not going to accept them. And likewise, you just kind of have to figure out a way to kind of pass that information and figure out, I could fill 10 hours a day every single day of the week with calls for people who just want to pick my brain, have a chat, hear about my journey. And so then I like to sort of direct them to podcasts like this and be like, hey, I spoke about that, exactly that thing.
Just go here, listen to it.
Have a listen over here. But I can't do that one-on-one for everyone who requests it, which partly makes me sad, because I remember, when I was first starting out and trying to make connections and trying to meet people, it is really sad to like message someone and just never get a reply. So I try to mostly at least reply to everyone, even if it's with a, hey, I'm not taking on any calls right now. I got that tip from my friend who works at Disney. I was like, how do you just say no to calls? And he was like, tell them you're not taking calls outside of your job. And I was like, that's good. I'm going to do that. So if someone wants a call, but it's not related to SoundCloud, which is what I get paid to do, then I'm not currently available.
Yeah. I mean, I've learned so much from you from this from this podcast, and I'm not going to say who it is, but there's some great guests on the Exit series as well. So hopefully the purpose for me is that we, founder by founder, exit by exit, understand more about the process, because at the end of the day, most music tech companies have investors and needs investors, and we're responsible to deliver some results, and we need to understand how we take those journeys. Ultimately, we need to create worth, obviously, but we need to know how to navigate. Thank you so much for being on the podcast, Hazel. I wish to meet you in person one day. I read many good things about you. I know the people around you, and they all appreciate you. So you must be a great human being. I'm gonna trust that.
Doing what I can. Doing what I can.
Thank you, Hazel. We'll talk again.
Thanks, Jacob.